Okay, off we go. We're kicking off today. We've got a great panel today to talk about today's Beyond Tokenization, building the data layer for real estate 3.0. So welcome everyone. Good morning, good afternoon, good evening, wherever you're in the world. Let's kick off with a fundamental question. What is real estate 3.0? Well, I think over the last few years, the industry has been focused heavily on digitalizing ownership through tokenization and blockchain infrastructure. But ownership alone doesn't create a functioning market. The real evolution of real estate is going to be making assets digitally understandable, verifiable, and investable. How are we going to do that? Through accessible, structured, and trusted data. Which really leads on to a second question. Once ownership is digitalized, what information is still needed to create trust, transparency, and investor confidence? Tokenization, look, it's opened the door to new ownership models, but ultimately investors still need reliable data, reporting, valuation, history, performance metrics, etc., etc. So today we're joined by 4 industry leaders building different pieces of what many are calling the next evolution of real estate infrastructure, the data layer for real estate 3.0. Wow, that was a mouthful. But I'm not here to talk today. I'm here today to host and moderate. So I want to get on with it. Speaker introduction. So first of all, as ever, we've got the CEO from Blocksquare, Dennis. Dennis, are you there for a quick intro? Okay, I'm not sure if Dennis is having problems. Going to move over to my good friend Ludovico Rossi, CRO from Brickland.
All right. You can hear me now?
Great. Sorry, Dennis, you're back. Over to you.
Right. Seems you can hear me, but I'm not sure if I can hear you guys. Any case, hope everybody's having a good time. Sorry for the delay. It seems we had some technical issues, but hopefully from here on, things will go and flow fluently. I'm Dennis. I'm the CEO and co-founder of Blocksquare, who's organizing this space today. And thank you very much for joining in. Blocksquare, for those who don't know, is one of the earliest and first proponents of real estate tokenization. Been at it since 2018 officially, when we've tokenized the first asset, a small parking space in Tech Park in Ljubljana. Today, we're a team of around 25 people with partners across the world, tokenized something over 200 million worth of real estate assets, which is a very small amount compared to the size of real estate. And one of the key questions is data. And I think today we're going to have a great space, and a great debate with some of the leaders in the space joining here. So, well, thank you, Mark.
No worries. Thank you. Thank you, Dennis. Now over to Ludovico Rossi, CRO from Brickland. Ludo, can you hear us? Just need to come off mute if you're speaking. Okay, I'm gonna come back to Ludo. Gonna go over to my good friend Matthew from Building Inc. to give a quick intro on yourself.
Yes, good to be here. I hope I'm coming through loud and clear. Usually
yes,
I'm the one with problems on X, and now I'm not. I feel quite privileged to have everything working smoothly. So my name is Matthew Schneider. I'm the CEO at Building Inc., and we are working on institutional memory and intelligence for real estate. I've really got to see this industry transform over the past 6 years. It's great that we are finally talking about data, because 6 years ago we were not. And I think that the industry has just matured so much that we get to have a great, serious conversation about this. And I'm just very excited to be here. And of course, industry colleagues, Matthew, Mark, Ludovico, Dennis. I mean, this is going to be one fantastic space. So thank you so much, Blocksquare, for having us all on.
Awesome. Thanks, Matt. Great to have you here. And then over to another Matt or Matteo over at Magma, CEO there. If you could give a quick 1-minute intro to yourself, that'd be great.
Yes. Hello, everyone. Hello. A lot of familiar people here. It's great to be here. My name is Matt. I am the co-founder and CEO of Magma. Been working in the space since 2018. I'm a real estate developer by trade. I worked in finance in very large banks for 5 years, and then for 15 years I was a real estate developer, and I followed the digitization trend since 2018. Did a smart city project for the city of Miami that was awarded the keys of Miami-Dade County, and Magma is a platform that creates unique digital identity using digital twin and a data room that represent the building during all its life cycle.
Great. Thank you, Matt. I'm going to go back to Ludo. Hopefully this will work, just to give a 1-minute intro as well to yourself.
GM, hi everyone. I don't know, I wasn't listening, and then I started to see reactions, so it was like definitely they are talking. So hi everybody, I'm Ludovico Rossi, Chief Revenue Officer and co-founder of Bricken, and we are building infrastructure for RWA. Being in space for more than 5 years already, and been tokenizing more than 500 millions in value in 30 different countries, and counting with more than 150 clients so far. Happy to be here. Thanks for the invitation, guys.
Appreciate it, Ludo. All right, we're going to get off to the first segment, and it's what is the data layer? And I want to put this out to all of the panel. I think it will be great to hear from all of you on this particular question. But when you hear the phrase, the data layer for real estate, what does that actually mean from your perspective? I'll kick it off with, over to you, Dennis.
I think data in real estate comes in different forms. Real estate as an asset class, it has, it's a tangible thing that has a lot of materials. So materials are part of the data as well. How they've been assembled, constructed, when they've been assembled, constructed, how they've been maintained. So the complexity of that data segment is huge. There's another part of data which relates a bit more to tokenization, but it doesn't derive its final verdict in a way from the whole segment I just mentioned, which is valuation data. And valuation data usually looks at comparables and market transactions of similar assets. And I think, the challenge is that this is a very complex soup of information that in the end points to just a couple of things, right? Of data points that are really important in the end for a potential investor who's looking into investing in a specific asset. And that's kind of it.
Thank you, Dennis. Great to hear from you. Be really good actually to hear the two Matt's perspective on this also.
Yeah, I'll jump in quickly. So Dennis made a great point that there's a lot of complexity in real estate. And what problem this creates is that we don't have a common language between buildings, between markets, and ultimately between tokenization platforms. So if we work on establishing a data layer to fix that and allow for standardization across the data that's being collected, about the valuations that are being produced, that's going to help out magnificently. And then to push the envelope further, we would also want there to be trust built into that data layer. It's not good enough that data is circulating. We want to be able to verify the numbers that we're working with. And so if you have standardization and verification, which a blockchain would offer, then we can start to see trustworthy numbers across assets, across their life cycles, and across markets. And we can start treating tokenized real estate as a true global market rather than one-off or idiosyncratic instances of tokenization. When we create a data layer, this will create a domino effect because good data sits between everything else. Every single decision and every price stems from data. You wouldn't be able to value the asset. You can't conduct diligence, especially cross-border, or trade and have comparables if you don't have the data layer established first. And when I said in the beginning, it's great to see after 6 years, we're finally having this conversation because capital markets figured this out a while ago. Public markets said data has to be standardized. There has to be some sort of reporting framework. And private markets, private real estate sort of skipped over that. It's gotten by on handshake deals for a while. And then when we brought about tokenization, we thought that might just be fixed overnight, when the reality is we have to go back to the basics and create this data layer. And the people on this panel are really, I haven't seen anyone else talking about this. So it's being created in real time by this great leadership team. And then tokenization will start to scale. So I'm very excited to see what we uncover here today.
Awesome. And go over the rest of the panel. But Matt, just touching a quick bit on there, when you brought up capital markets, I agree with you. I think this was seen in the investment banking world by standardized data layers, and that really improved the fungibility, a lot of investment banking processes. So, Matt, I'm going to have two Matt in the call, so I'm going to get Mattia. Am I saying that right?
Sorry?
Am I pronouncing that right, your full name?
Yeah, you can say Matt. Matt is fine. Yes. So like Dennis and Matt outlined very well, there will be a need. There is an absolute need for this data layer to be built that sits between the physical building and the financial market. Usually, real estate is a very opaque industry. It's one of the least digitized. There are different sources of data, like Dennis mentioned, that comes from different people that are working in the building. You have the property managers, different formats and different files. I have some echo in my. Do you hear some echo? I have echo in my.
In and out, but you're back. You're back now. We lost you for a second, but you're back now.
Where is the echo coming from? I hear Matt on my ear.
Oh, I
hear Matt speaking.
I don't know. You're sounding live and direct. You sound very good now.
I sound good. Okay, so I take the ear off my ear, my earpiece off my ear. So I was saying that the data comes from a lot of different parts and different sources, and there is no common language for the real estate industry. So what we are creating right now is a layer of data that sits on top of the physical asset, and that can be shared and used as knowledge, as intelligence to perform operation in the real estate, whether it's operating management of the building or financial operation. This is critical that we move beyond just tokenizing the ownership, but with tokenizing all the data that the building can provide, and that this data can be validated, verified, and then analyzed and used as intelligence. So it's really the most critical parts that we are talking about today that will really open the gates for a lot of new opportunities and application in the digital space for real estate.
Okay, thank you, Matt. I'm going to move on to Ludo, but just a quick note. I think you're in and out again, but we'll try and get that sorted when you next come back on. Ludo, over to you. Any thoughts on this particular question?
Yes, of course. So, I mean, from our perspective, that we've been able to tokenize, many different assets. I agree. I mean, the data layer is completely missing out. So that's why also we partnered up last month, actually, officially with Magma, and now we are building the first POC. And it's all about the data. I mean, if we take the Dubai use case, when suddenly out of the blue there is a war in the Gulf, and we don't know actually how much the price dropped, in the tokenized real estate. So the investors, they just have tokens, but without any idea about the data. I mean, that's a problem, no? And then just a clear case that we have at the moment on the market. So I do think that the data layer, I mean, is of course needed. It's something that this year, I mean, we are seeing the many solutions coming to the market. I think, I mean, talking about real estate, Magma is definitely one of the most efficient and complex as well, because, I mean, they have so many data points and so specific that you can really get, I mean, idea and data about any little change, about any information regarding that real estate. So, and I also think that, I mean, we need the data not only for real estate, but we need data in the market. I mean, regarding any kind of asset. And we will also need data in the future if we want just making a projection for the agentic economy. So the agents are able to read the information about those assets in order to take informed decisions. So yeah, absolutely. Data is, I think, one of the last layers that are missing to really giving like a nice sense and transparency to all these tokenized assets.
Thank you, Luda. I know we've got something also to dive in deeper on these topics later, so looking forward to coming back to you. So Matt, Building Inc., I'm going to come back to you as we move into the next segment, from ownership to investability. I've got a great one for you because I know you're the expert on this, so I'm going to really drill down deep. So real estate investors, they often receive PDFs, spreadsheets, valuation reports, marketing decks. So what information should be standardized, machine readable, if we want real estate to become investable at scale? All right, over to you, Matt.
It's a very good question. And I did ping our friends Matt, and if we want, we can call me Schneider. It stands out as a name just to separate the two. But I let Matt know about his mic. Schneider, yes, German. So the question about, what real estate investors should receive so that real estate becomes more attractive as an asset class. What's interesting is that the documents that they do receive is actually fairly consistent between deals. They know to ask for a rent roll or an operating statement. More sophisticated investors will look at a lease, and everyone's going to be looking at a valuation. But generally, the problem is what sits inside of those documents. It's how they're formatted, how they're prepared, how spreadsheets are put together. That's where there's huge variety and a lot of interpretation that becomes subjective. You could have two operating agreements and they would not be able to map to the same places if you were to extract data. You could do the same thing with spreadsheets. Looks like there should be a cell here, a number here, and it's missing. It's very different the way that public companies, which have standardized disclosure, are go through that process. Like if we look at valuation, when a public company goes through this process, whether that's XBRL or any other, the paperwork that gets released, one number means one thing. There's not multiple interpretations of the same data that, which real estate would struggle with. So that's one issue. It's understanding the data within the documents. And then there's different valuation methods. So when you layer that on top, people are coming to different conclusions. And a really good example, I was doing some research beforehand. So there was a UK case law that said that the margin of error on a valuation could be 10 to 15%, even up to 20%. So you could have two appraisers looking at the same real estate asset, doing their job properly, and have a 15% difference in the value. That's not comparable at all to the way that a public market asset would be valued. So if we start pushing for better standardization in private market real estate, and then the documents that are produced within that are machine readable and they are consistent, like whether we're talking rent roll normalization or how people write out the debts and the debt terms, the leases, this is going to create valuations that are far more dependable. And then again, if we can take those numbers and include verification in addition to the standardization, so we're all looking at the same numbers, but then we can all trust the numbers with the same integrity, that is going to move this market significantly, because the issue is not always that we don't have data, it's that we don't trust the data that we're working with. So if there's provenance behind the numbers, and we can see how they've been produced, what source, under what circumstances, and if a third party helped to verify that, then we can certainly trust and start to compare the numbers between assets, the inputs and the outputs, like a valuation. Let me pause there so I don't grab the mic from you too long, Mark.
Snyder, we always like having you on here. So and the audience love listening to you. But I'm going to even test this out. How many people love listening to Snyder? Give a thumbs up here, or heart, or whatever emoji. Look at that, lighting up. Come on, guys, come on. Let's light this up even further. I want to see.
We've got two. That's a good start.
Yeah, no, we've got them lighting up all over the place. There you go. So let me move over to a non-Snyder, over to the look at that, another map. Well, you're lighting it up. It's like strobe lights in a nightclub, all right? They're going to get back to business. So over to the other map. Now, tokenization creates a digital representation of ownership. We all know that. Magma focuses on creating a digital representation of the building itself. So why is that distinction important?
Yes, because the ownership can only carry so much information as the title, maybe the situation regarding the collateralization of the building, but it doesn't give a real view of what the asset is and what the risk of buying this asset could be. What is the governance about this asset? What will be my capital expenditure on this building? And this is normally what makes your investment a good or a bad decision. And if you are not able to assess that information during the life cycle of the building, then you are more eager to make you can make bad decision. So by creating a digital representation of the building during its life cycle, you lower the risk for the investors and for all the people that are working in the build environment. So it goes beyond just tokenizing the ownership. It's just tokenizing the entire data sets, from equipment to materials to life cycle of the building. And once you have all that digitized, you can even plug certain application to optimize energy, for example, or maintenance. Because once you have digitized the building, then you can start getting intelligence from it and improve the condition of the building. So it's also a way for a buyer of a token to know what is the future of that building. Can I improve my energy performance? Can I rent at a higher price because I make retrofits? How much is it going to cost me to make those retrofits? Can I change the use? Is the zoning going to change? So all these questions can be answered once you have a digital infrastructure in place, and then you can just go from a static environment where you had PDFs and files staying in a computer, from something that is more dynamic and that you can update over time and ask people to update over time. Give me the condition of the roof. Give me the condition of the air conditioning. Tell me why I had a failure in my electrical pump. All those questions, once you have this digital infrastructure, can be answered and remediated much easier. So it's a complete rethinking, reinventing of the real estate industry at large. And today I wanna make a shout out to the group today, because we are really all have been following, and we are already partners with some of the people in this panel, and I've been following Dennis and Blocksquare for many years, and I know how difficult it is. But now that you have the full stack, you can really understand that we are not only improving a game, we are completely changing the board of the game. So, and that's all of us. We all represent one part of this stack. And that's why we have partnership together, because we all fulfill one of the stack.
Thank you, Matt. Appreciate the love there, coming back to Blocksquare. And actually on that point, let's go back to Dennis, CEO at Blocksquare. to some of those points. And Dennis, look, we all know we've been building ownership infrastructure for years, and now already is the data layer what we're talking about here today. So what would you say is the minimum level of transparency and reporting investors should expect before they commit capital to a tokenized property?
Well, that's a good question. I guess it hasn't been answered yet because we have so many different models of how we, transfer the value of real estate and tokenize it, bring it on chain. I think one of the key components, just to be, one thing, ownership. What's the proof of ownership? How is that derived from which records? Is there a third party confirming it somehow? And I think that's something that really needs to be the key component of it. Because if you're tokenizing a right, it derives from another right or a stake in another enterprise that owns a part of a building, then there's many layers in between and many risks. If it's direct tokenization and it's directly attached to the ownership of the asset, then those risks are lessened, let's say, or lower. Another thing is financial projections. Where do they derive? Is this something that's real intelligence data that comes from the market? What's the proof of it? Is there lease contracts in place already? Or is there comparable buildings around if it's a new build that has, it's a built to rent type of thing? How are similar assets performing around? And again, you are depending on third parties providing this data, because if it's unilaterally provided by the issuer of the token, the company tokenizing the asset, then, it's biased and it can be altered. And in the end, how it's contractually tied to the asset. What's the obligation that the contractual agreement part, the legal part of the tokenization, and how it binds, and what are the consequences if things go wrong? I think those are important. So if the structure is done in a way where the asset owner who is tokenizing the asset, the issuer, gets hurt if things go wrong, then that's the right structure. If they don't get hurt, then there's probably a red flag somewhere.
Yeah. The OG Dennis speaks, and again, let's keep lighting up this X Spaces with our OGs talking like this. It's the alpha is gold dust, especially in RWAs. And as you keep lighting up this X Space, I'm going to move on to our next segment, and that's something that I'm really excited about. I can't wait to ask this question. But can real estate ever trade like public markets? I've got my own opinions. I'm going to keep them to myself today. Snyder, this is one for you. Public companies report quarterly.
Yeah.
Globally around the world, that doesn't change. But many real estate investments report annually. Is it fundamentally incompatible with liquidity?
Wow, this is an exciting question. And before I get to it, I got to say Dennis hit a lot of fantastic points, especially about the need for third parties. And actually, it plays into this answer quite well, because what public markets have are intermediaries. They do have centralized databases and third parties who act as verifiers of the data that's being delivered from, let's say, a company that is listed on an exchange somewhere. Private market real estate does not have that. And it avoids that sometimes for good reason, because it's quite expensive to go through all of that. The process of collecting data and then giving that to another organization and they perform verification on that data, this costs time, money, and cycles. And in real estate, this can really drag on. So a lot of deals will omit the verification or the extended diligence and work on handshake-based deals, for better or for worse. But this does not work at scale. So there's sort of a conflict here where real estate gets by on a lack of disclosure, but then we want it to act like a public market that has lots of liquidity. And the reality is that you can't have both. You have to choose which direction. Are we going to disclose more and have disclosure and price discovery and tradability, or are we going to resort to opaque markets but not extend or spend a lot of time in extended periods of diligence and costs. So your question of, we've got quarterly reporting. Would real estate be able to match that? And would that have the benefit of creating more liquidity? I took a few notes on this because there's a few problems stacked up here. It's really a loaded question. So frequency of data is one issue. It's certainly a major issue. I mean, some real estate deals or portfolios can go years without major third-party marks on assets. So sometimes it will be annual and you'll go get an appraisal, third party comes in, and everything in between that would be issuer produced numbers or some sort of investor newsletter, which really is not sufficient data to be connected to a smart contract that people are clicking the sell button on. It's more of an opinion rather than an actual data input. So we need official data delivery more frequently so that people can make decisions in the market that the asset is priced or what it should be worth, its fair market value, and then risk associated with that. But second, we have to go back to the standardization argument. So private real estate reporting is very inconsistent. So even if you do have a report, it's all interpretation. We can send monthly newsletters about a real estate deal, but that's not a standardized format, not in the same way that delivering data in a public market is standardized, scrutinized, and audited and expected to look in a very particular way. Third, and this actually feeds into the first issues, which is frequency and format, is just the cost and time of doing all of this. Public companies are massive, and so they can afford the 10-finger automation that goes into preparing all of this data for stakeholders. Real estate developers, asset managers, REITs, they don't necessarily have those resources. And if you're in an environment like this, where margins are tighter, then they are not going to go through the work of running this process across a bunch of heterogeneous assets because it requires manual scrutiny and interpretation of all the data. It's just too much office work. Now, here's the good news, because I'm not just here to complain about the state of private markets. I think that what we are talking about here today is possible because compute, workflows, artificial intelligence, it's now affordable to the point that we would be able to take all the data that public disclosure would typically require and actually process that at speed and at scale without it being an administrative burden. So we will be able to source data from the assets, move it between workflows, bring in intermediaries, port it to other software, get blockchain verifications, and then push it into valuation models, into waterfall calculators or fund administration software, tokenization platforms, and it can happen almost instantaneously. That is the wonder. People say, well, why wasn't this done many years ago? The technology just wasn't really there. And now it's here and it's affordable to the point that we could certainly roll this out at scale. And what's going to happen is that as we process these huge amounts of data globally, and we can start connecting the dots in new ways, we will have new price discovery, which is it precedes liquidity. When buyers and sellers can skip all the diligence or the interrogation of the documents and questioning the integrity and just arrive at a bid-ask spread and say, I think it's worth this, are you willing to sell? And then they transact, that is liquidity. And the faster that you can get to that point, the faster the market is going to operate, which is the benefits that going public generally has. So that was a lot to put out there, but if I were to go off the top again, yes, we need more frequency of the data. We need it to be more standardized. We want verifiability so that we can trust each other across borders. And artificial intelligence is going to be our best friend. And by our, I mean platforms, tokenization service providers, real estate developers, our good friend to handle all of that data that otherwise would have required a huge team or a whole lot of time to get around to it. And we'll start to see probably monthly marks on real estate, which is fantastic transparency. And then people will be able to invest into it, trade it, collateralize it without incurring all sorts of risk. And then the market, I think, is going to grow tremendously. And that's just the tip of the iceberg. But you know me. I want to make sure I share the panel here.
Thank you, Snyder. I really appreciate that. I'm going to move over to another topic that's really hot, and Snyder, you touched on it, and it's AI agents, real estate data. And Ludovico, I think this is a good one for you. Everyone is talking about AI agents. If AI agents are expected to analyze and interact with tokenized real estate, how important is it that it's structured and verifiable? How important is structured and verifiable property data?
Okay, this is also a fantastic question. So, touching, first of all, I want to add something to actually Schneider. And this, I agree on top of all the data layer, etc. But the question is, do we really want to have like an intraday trading on real estate, and at what rate? Because we can consider it from a flat to a REIT. It is a fund, so it depends, no? So I think we will see, in private markets trade, and really more often than today, like way more often compared with today. But at the end of the day, I will not see the majority of the real estate traded like in a stock exchange, because I think there is no need, and also like the price variation maybe cannot be really sexy for the investors. But this is my opinion, so I will keep it there. About agentic agents and agentic economy, what I do think is, yesterday I was in another panel and we were discussing about like blockchain, if it was built for humans or maybe for agents, no? Because we saw, the blockchain technology getting adopted, but really slowly. But now with agents, everything is changing. Everything makes sense. Everything is there, no? Of course, the data layer is, something that, the most important pillar, I would say, because only with the readable and clear data and information, the agent will be able to take the right decisions. And also, a good thing about blockchain is that we can finally tracking on the actions of an agent, no? So in brief, this is something that we are discussing internally, and we are working on an open standard on Ethereum. It's called the ERC 8226. We call it RAMS, Regulated Agent Mandate standard, that is actually this layer that is allowing and delegating to an agent the proxy of a principal to trade a security, no? Or an RWA. But if we go deeper, we need like an open function that we use the byte 32. So it's just a function that you can call it, and you use like off-chain or on-chain data, no? And with this, then we realized that we will keep it, for the most difficult use case, that will be like having an agent to be able and capable of compliant to trade on behalf of someone else. That can be an entity or just, a physical person. But the thing is, we need a data layer actually to track on chain and allow the agents to take actions, right? Like a signature, like, any kind of action that has an output that is involving some possible consequences, then we need to track it. We need to track the ID, the agent, etc. So I think blockchain is the perfect venue. I think data is the most important pillar. And then I think that the agentic economy really will surprise us in the future with everything is capable of.
Thank you, Ludo. And I think just in a few words, Dennis and Matt, or Snyder, Matt's rejoining as we speak. Can you give me literally one sentence for this question? Can AI improve investment decisions if the underlying property data is incomplete, inconsistent, or outdated?
I'll answer a question with a question. Um, can an AI agent buy you a pair of shoes if it doesn't know what your size is?
I'm going on Claude right now. Let's see. Maybe for my previous chat. Please check my previous chat.
But jokes aside, I think data completeness is.
Claude is actually telling me right now, I cannot check your previous chats.
I think if data is incomplete, agents will have hallucinated opinions that can differ widely. But I think for investors to have a more educated or easier ingestion or digestion of multiple data sources, and like Matthew Snyder mentioned, there's so many different formats of the same thing, and agentic AI and MCPs will make it much easier for investors to get a clear outcome or a clear look into this information. And I think then that at least improves one part of the equation. But I don't know, Matt, what's your opinion here?
Well, my opinion was your opinion. I think you summed it up very well. Completeness of data is very important for agents. I would also say that agents only follow instructions. They are doing what they are programmed to do. If it's very linear, it could miss opportunities or it could take things too literally. If it is prompted with bias, that could influence the investment decision. So it is a half step towards better investment opportunities, but it is not, I don't think that we will see systematic or programmatic. Looks like we just lost Mark.
Yeah, I see we lost Mark. Let's see if he can come back. But in the meantime, I'll take over on moderating or trying to moderate. Matthew, what's your take on this?
Yes. Hello, can you hear me?
Yes, we
can. You hear me now?
Matt. I was lost.
Yes.
Yes. Go ahead.
Yes. Sorry, I missed the question because I was. I had a
no problem.
Problem with my sound.
No problem. Yes. Well,
can you repeat the question?
Yeah, we've got a new question going out to all the panels. So
it was
just joined in time and
about the structural data for
you're actually
for AI.
up, Matt. So I'm just trying to.
Yes. Okay.
Matt, you're
okay.
You're cutting out
so
at the moment.
We see it because like we said, we are like a digital passport for a building. So we see data not only for the building. There will be multiple agents or also deployed help at the facility management, meaning for the of assets, agents that will for investments. So then the that will need to be reassessed, and the used in the management, meaning for investors, will be completely derived from a platform and digital instrument PropTech solution that will be deployed. All those solutions will create a lot of data, and data will feed. That's exactly what we are doing with Bricken. With Bricken, we are creating a way to feed the net sales to the data that we gather using and a lot of AI agents. We are working on agents right now to eliminate asymmetry of information, for example, between different systems, to make sure the information is correct between two different systems. Recognize objects in the scan environment within a building.
There's an AI agent or gremlin playing around here with Matt's microphone. So, but I think we caught the gist of it. So appreciate Matt coming back. And if that AI agent, I'll get a prompt going. Snyder probably can help me out with a prompt. We'll make sure that AI agent works and gets Matt back online. Right. So over to the final segment, building real estate 3.0. And I love this question. Which comes first, better data or better liquidity? I would go to Snyder on this one because I know he's got a lot to talk about, but I want to bring Ludo back into this before we close out on this last question. Which comes first, Ludo? Better data or better liquidity?
This is a good one.
Yeah. That's why we've got to hold Snyder away from this. You know, let's go.
I think that are kind of related, so I would answer. More or less at the same time. I would definitely want to see more liquidity in the market, into the RWAs. Definitely, I think data can help a lot to get the trust and investors on board. So, I think that are two ways that will coincide pretty much. And it's the first the egg or the chicken. This is the same question, I guess.
Exactly. And over to the man that we all call Snyder.
Yeah, my interpretation of it is that it is sort of chicken and egg, but it's almost like equation versus solution or output. Like liquidity is something that you receive as a consequence of making something attractive to a buyer. But you can't create liquidity per se, only in the instance of, let's say we're hyping up a meme coin. Then people are going to be attracted to it. Even then, there's something that pulls them to the transaction. So in the case of a real estate market where investors are a bit more conservative, the data has to come first and liquidity becomes a natural consequence. When buyers, especially sophisticated buyers, we could talk about retail investment into real estate, but I think we're all very interested in how billions of dollars, if not trillions, could flow into tokenized markets. So we have to have a different caliber of conversation. And we do talk about all of the diligence and the price discovery and the verification disclosure requirements. When we follow through on that, it will make the asset on chain not only more attractive, but there's a regulatory component to this. Financial institutions, sophisticated investors, funds, REITs, they can't just hold any asset on their balance sheet. There are guidelines to what they're expecting about the price and risk of the asset before they make a move on that, because there's consequences for loss. So with proper data and disclosure, assets can become de-risked. And in the US and under IFRS as well, it can reclassify an asset, which is sort of the institutional barrier between this is too risky and this is now at a risk and disclosure point that we're comfortable moving a lot of money into it because we know that our reserve requirements, like how much cash we need on hand, aren't going to be too demanding. There will be potential liquidity. The spread when we go to sell this asset isn't going to be astronomical. These are real considerations, generally not for one-off assets being tokenized, but we're talking about the ideal here. So good data has a ripple effect that goes far beyond than some of the things that we've talked about here, even into the regulated environments, and then that will attract liquidity at scale. And liquidity can come in different forms. So Ludovico had a great point. I don't think people are going to be day trading real estate, but at least more frequent trades. Sometimes that might go from once a year to maybe quarterly or monthly. And then I do think that there will be the creation of derivative markets that create liquidity that don't require trading of the underlying asset itself, because real estate is certainly a buy and hold strategy. But with new price, people could create derivatives, they could have arbitrage, or hedging, and you might see more activity like that. That's what I think. Mark, back to you.
Thank you, Snyder. Dennis, I think it's worth hearing from you on this question.
Not sure.
Better data or better? Yeah.
I'm not sure if it's worth hearing from me. I have no clue what's going to come first. But I think better data is what we should strive.
Dennis, you're an OG, Dennis. We love to hear your opinion.
I think we should strive on the fundamentals, which then goes towards better data. I think if we can really solve better data and not necessarily solve everything, we won't be able to do that overnight. But if we put our heads together and invest time and money into creating a better way of presenting data, a structured way of presenting data, at least in a tokenized environment, even though maybe in private markets that's not the case, we could at least agree the couple of players that are in the tokenization of real estate space, how data should be presented and what should be, a standardized way. And I think that's going to create a strong message that potentially can attract a more institutional liquidity, or at least liquidity from what institutions call retail, which is high net worth individuals, family offices, which for us would essentially equate to a non-retail market. And I think that's kind of the direction we should go towards. And Matthew here, both Matthews here, are working relentlessly on making that happen. And I believe that there will be, pivotal to unlocking some of this in the near future.
Great. And I think we have Matt back as well.
Yes,
Matt,
hopefully, yes, hopefully it works. I changed phone. Hopefully, let's cross fingers.
Loud and clear, Matt.
Okay, cool. Yes, no, I agree that that liquidity, I mean, it doesn't come magically, right? Liquidity comes when you can trust an asset enough to invest in it. And if you have trusted information about the asset, like you have in the public markets, if you have the same level of transparency in the private markets, then you will have liquidity. Also, we need to think about who is the audience here. What liquidity are we talking about? Are we talking about the public, the retail, small investors that are going to buy fractional ownership? Or are we talking about large institutions that are going to start transacting in crypto, in stable coins, their large assets? So those are two different types of investors and two different types of regulation that needs to be solved before we can see significant liquidity coming in. And that's what I think MiCA is doing in Europe, and the Clarity Act and the Genius Act is doing in the US by allowing institutions to hold crypto in their balance sheet. There is another bottleneck that needs to be resolved if we want to see liquidity, and it's a major one, is the technical barrier to entry with the wallets and the private keys. This is something that's very, even for us that are in the industry for years, is still very complicated to move crypto through wallet to wallet. And I think a lot more simplification on this side in the user interface and the user experience will be very helpful to help smaller investors come in the market and create that liquidity. So there are regulation problems, there are technical problems that need to be solved before we can see significant liquidity coming in that market.
Great. Thank you so much for that. Now, we're coming to a close, and yeah, we had a few gremlins earlier on, but I want to go back to each of the panel to close out. I'm going to start with the OG Dennis as well. Yes, I see a lot of sad faces, but we will be coming back again next month. I've got a few words on that actually when I go back to the panel after that to say on that. But I want to go back to the panel, and I'm going to play a little game with you guys, starting with Dennis, right? I just want a few words, one word or a few words, and I want you to fill the blank of what I'm about to say. So it's going to be the same sentence for everyone. So starting off with you, Dennis. Real estate 3.0 becomes the reality when
Data is standardized.
Matt, from over to you. Real estate 3.0 becomes reality when
interoperability is reached.
Oh, love it. Ludo, real estate 3.0 becomes reality when
we have all these waves converging together. It was an easy one.
Love it. Snyder, last but not least, real estate 3.0 becomes reality when
verifying a building takes a query, not a quarter.
There you go, folks. I think, we could sum that up, that is really about data standardization. It's really great to talk about data, I think. Data layer for real estate 3.0. There we are. I'm been in tokenization space for a long time, like all of these OGs we got on the line. And I think data, I even thought data was a second thought. But after today's discussion, we all know data is the next real jigsaw in a puzzle to get sorted. Now, just a few other admin stuff for next month. I know a lot of you were requesting to speak during today's session. We've had to, almost unfortunately deny those requests. We do want audience participation, but today was just really cut short, unfortunately, with everything going on. But I'm going to have a talk with the team, because we've been talking about this for a while, to have the audience Q&A. And whether that's you guys coming in live and asking questions directly, or we get a feed in on these questions, I definitely, there was a lot of audience members that wanted to ask questions. So we will find a way to make that happen, whether that continues on X Spaces or we do something on LinkedIn. But I've seen the keenness for the audience. So I'm going to give a round of applause for the audience for listening, and all those questions that you wanted to ask. Going to make sure for the next session, we bring you in. It's really good to see you guys very engaged, wanting to learn a lot more. And I'm sure, you guys have got better questions than me to ask. So we're going to find a way to make sure that works and happens. It's just unfortunate our time was limited today. So look, please carry on following Blocksquare. Please make sure you follow all our panelists today and their respective companies. As they mentioned, we all work together and fulfill different areas of the data layer and tokenization in general. So thank you again to a wonderful panel, and again to the Blocksquare team behind the scenes for creating all the materials for today. Like I said last month, I'm just a host, I'm just the moderator, I smile, I talk, but there's a bigger team behind this. Julie, Hassan, the rest of the team that bring this all together. So a good massive round of applause. I'm clapping and I forget I've got emojis here as well that I can click away. So let me just give that a hearts up myself. So I'm here in the British Virgin Islands, and to the panel, I'm going to take a lot of what you said today, the data layer, into a keynote and panels I'm doing on real estate tokenization as well. So I really appreciate your input. I will definitely quote you guys as well, given the OGs you are. So thank you very much to everyone on the panel. Thanks to the audience. Good night, good afternoon, good evening. Au revoir, bon voyage. Can't think of any more. I'm going to think of a few more languages for next month. Take care, everyone. We'll speak soon. Look after yourselves.